Good evening to all of you and a pleasant day ahead. Over the next 15 minutes, I'm going to give you a brief snapshot of the opportunities and challenges of the Indian economy. So without much ado, let me start. So the first thing is an economy status update on the short term. I'm going to take about 5 minutes for the short term and about 10 minutes for the long term. So on the economy, the first thing on the short term is obviously, as you are aware, the COVID impact. So on the COVID impact, what is it? We're glad to report that active cases plus deaths post the second wave are contained. Moreover, if you look at the number of districts with positivity rate, that's been gradually improving and a secular drop is there. The third aspect is that the second wave, the increase was largely in the Kerala and a few northeastern states. It was not widespread. The fourth thing is that if you look at it, India, the main challenge that we are facing on the COVID is our level of vaccination. The world average is 28 and India is still below that. What are the plans? First thing, we have improved our testing levels of the thing in preparation for a third wave. The second is that we need increasing vaccination. So unless we vaccinate 70% of our population, we can't build that herd immunity to make sure that a third wave or a fourth wave doesn't affect the economy. So if you see here, if you double our rate of vaccinations, there is an optimism that by December this year itself, we would achieve that target. And to plan for that, we have now widened the basket of vaccines available. Covishield, Covaxin, Sputnik, BioE, and Zydus Cadila all are on track. Something like 1.88 billion vaccine doses are expected. So I think on the COVID front, we are reasonably now well in control that in a third or a fourth wave may not impact the economy as much. So back again to the short-term status update to the economy, right? I just repeated these slides, just a minute, right? So what is it? The first thing is something that's generally viewed as bad news by all of us as commuters, right? Congestion. But that's the best sign that the economy is coming back. And glad to see that across the major metros, congestion has started picking up. So signs of health. Second, truck freight rates, which is equal critical to the economy. So from Delhi onwards to Calcutta, Bangalore, Chennai, you can see that freight rates have gone up, which means demand for freight is going up. Again, a good signal. Third is the trend in two-wheeler and passenger sales. That's been improving, which means people, after postponing their purchases, are coming back and buying their vehicles. The same is true of the rural India in terms of tractor sales. And even if you see every company, right? Whether it's Honda, Mahindra Motor, MSIL, M&M, everybody is showing a V-shaped recovery. So economy, that's a good. So more importantly, is that a strong success factor in the economy has been the exports, a key success story in the post-COVID period. So this is, if you see, our non-oil exports, because exporting oil is just a commodity, have shown a sharp uptick. And the left-hand side, the dotted line tells you where the first few months of this year are compared to the last 3 years. So clearly exports have taken. Where are the exports come from? If you see across sectors, right? The greens tell you that exports are improving, but the main clear winners are one, drugs and pharma, because as you know, India has got the largest bulk drug manufacturing capacity, and that is coming to an aid in the post-COVID world. Electronic exports have seen a sharp uptick. Iron ore exports have seen a very strong uptick. Engineering goods have seen a strong uptick. So as you can see, across the board, exports have shown a strong pickup, right? So now when you come to summary indicators, right, you can see that manufacturing activity has now come back as a PMI level above 50. Above 50 means growth trends are back and it's a rising trend. Services is lagging because the lockdown hurt the service sector, but you could see here a V-shaped recovery happening there, right? So as a result, unemployment has now touched a 4-month low. Good news again, people are back to work. And reflective of the overall economy is the GST collections, which in the second wave drop has shown a sharp uptick. Next is that overall, if you see a business resumption index, last month we came back to 99.4% of the pre-COVID level. So Indian economy is up strong and ticking in the short run. And hence, if you take economic activity tracker, which correctly predicts the GVA, gross value added growth, you can see that it is predicting a further rise in the gross value added, which will translate into GDP growth. And hence we remain confident that the 9.5% projection which RBI made is well on track for this year. Moving now to the medium term, the economy is not just about the short term. We need a strong, healthy economy in the medium term because ultimately this forms a part of your investment decision. This in medium term, if you see as an economy, the tracker, the nominal GDP, the real GDP, the inflation, the credit growth, the current account deficit, and the fiscal deficit. All of these from a red for last year are set to steadily improve into a status of green. This gives you in a snapshot that the outlook for the Indian economy across risk and growth both is in a positive. Dwelling into this, right? What we expect for India is that we expect our GDP to shift up by 1.4 trillion in the next 5 years. And you look at it, we're among the fastest growing countries in the world in that period. And this nominal GDP production should see us overtake the United Kingdom in terms of absolute GDP growth. And what is this level? This level is 4.1 trillion. I know Mr. Modi set a goal of 5 trillion. Unfortunately, COVID came and has put a dampener to that, but we think that 4.1 trillion is possible by 2025. But what are the actual things that are going to get us there? The biggest thing I would say is the opportunity lies in a neighboring country, that's China. What is this? It's a China plus one strategy. Where does this come from? This is probably the most important slide. China, the red line, it's working age population, the labor, right? From 2017 has started declining because of their one family, one child policy. As you know, China has been the fastest growing nation on the strength of its labor because they became the manufacturing capital. And that's the path of growth that India has decided to adopt and is going to adopt. Why? Because their labor supply from 2017 is declining, but our labor supply is on a rising trend, the black line, right up to the year 2050, which means for 25 years, India is assured of a rising labor supply, biggest strong demographic factor. The second is the cost of the labor. India's per capita wages is $3,800, whereas China, if you can see, is $9,700. So we are one third as cheap as China compared to labor. Now you will say cost is okay. What about productivity, right? There, when you look at it, we are among the youngest countries in the world, right? Our average median age is only 32 years, right? And 67% of India's population is in the working age bracket, able and willing to work. Third, our youth literacy rate at 92% is among the highest, and our outturn of graduates is on a steadily increasing path, so much so by the end of the decade we'll be turning out 11 million graduates, right? So as a result of this, from a productivity factor, if you look at it, compared to all our competing countries, India with a 4.8 productivity factor has shown the most strongest improvement. So even on a productivity level, India is well positioned from a demographic perspective. And if you take all the exporting countries, right, India has got excellently positioned in terms of the share of working age population among the exporting peers, right? And you already saw that export success in the short run also is showing up. So as a result of this, this means that India is set to triple its manufacturing by the end of the decade. So that's the big story around it. And share of GVA of manufacturing is expected to explode to 20% of the GDP by 2030, right? And to support this, we need capital. And where is the capital from? India is a capital-starved country. Foreigners are the ones who have to bring it in. FDI is the key driver, and for that, the government has taken the first step a couple of years ago of halving the tax rate from 35 to 17%. On top of it, all the infrastructure spend the government has been doing in improving roads, ports, airports has seen 79 places improvement in ease of doing business for a foreigner. Third aspect is that over the next 5 years, the Indian government is going to spend 111 lakh crores on the infrastructure, especially around the urban, the roads, and the ports and the projects. And this is what is going to help our ease of doing business improve even further. So strong steps by the government. And the most recent double whammy winner is the production linked incentive PLI scheme, where for any foreigner or Indian manufacturer who's going to set up a new manufacturing capacity, largely export driven, he's going to get 5 to 6% of the value addition he brings as an incentive for 5 years. So this is going to take our total to 2% of the GDP. And across various sectors, you can see the impact. Government has improved this licensing, and the capital expenditure needed to make this work is almost 2 trillion rupees, right? So from that perspective, already the effect is seen on handsets. India has become a net exporter of phones. We are seeing that global production firms have shifted to India from China, and our electronic exports have doubled in terms of their share of the imports, right? The second thing vis-a-vis China is that COVID has given a big push to the fact that 44% of the people already manufacturing in China say that they are intending to relocate, and that's the opportunity for India. And if you then look at it, FDI, already India has received $81.6 billion of FDI last financial year, a record high. So all the government steps are paying off dividends, and we are the country which showed a 22% growth in FDI flows compared to all our competitors. As you can see, we are one of the few countries on the right. All the rest have degrown in terms of their FDI allocation. And on top of this, right, the next sector which is going to drive growth is the real estate sector, which, as you can see from the V-shape forming, is on the cusp of a turnaround. What is the driving force behind this? Starts with the RBI's liquidity push and the rate cuts of the RBI, which has seen a sharp drop, as you can see, both in existing loans and new loans. This rate cut is giving a huge boost to the housing industry, which is a part of the real estate. And today, EMI proportion to salary is at a historic low of 27%, last seen in 2003-04. And real estate stamp duty cuts and others are making this even more attractive. In fact, today, only with 3% from your salary as an extra push, you can buy a second home and a third home. The difference between the tax adjusted interest and the rental yield. It's never been better to buy a house, and housing as a sector has an impact on 10 to 12 industries: cement, steel, PVC pipes, paints, wood, everything, right? So it's a huge multiplier. So housing is the second driver, and because of this driver, India's structural consumption, right? Because on the back of all this job creation and all of this, wages are going to go up. So India is set for a next structural consumption. And that small table tells you what a vast gap we have to cover on a per capita ownership of consumer durables vis-a-vis China. So the manufacturing story will be followed by a strong consumption boost. And so if you then look at it, today, services, which I spoke about, for every manufacturing job, 1.8 jobs are created in services. And today, services is 56% of our economy, manufacturing is 30%, agri is 15%. So on the back of the consumption boom, you're going to see a boom in the services sector. So as a result, we see that the 10-year moving average, right, India is set to grow at a 7 to 8% per annum for the next decade. On that basis, right, I'm saying 4.1 trillion by 2025, we will get there. But what are the challenges there, right? From a challenges perspective, right, I will say, I don't want to talk about it in the slide, but the challenge is only one of self-belief. It's only one of the ability to take the risk to deliver this number, right? So I think the biggest advice I would like to give to all of you is that the opportunity is vast. The problem is mental. The problem is that we must all believe in our country and its future. And so my only bet I will say is place all your bets on our economy. Do not bet against India. Thank you very much.
Okay. Sunil, that was a very energetic, very well researched, and put me in a very different frame of mind. You know, when I sleep tonight, I'm thinking of all kinds of things about what a wonderful future all of us have. But Sunil, if one agrees with your viewpoint that India is in for a good time, what does it translate into our investment returns?
So if you look at it,
growth in economy, how does it lead to? How does it translate into investment returns?
So basically, if you look at it, when I talked about the 7 to 8% GDP growth, that was the real GDP growth, right? And over a long period of time, I think we should expect inflation to be at around 5%, the current level. So 8 plus 5, 13% is the nominal GDP growth, and the stock market should return at least a 2 to 3% alpha, because it represents the formal sector of the economy, which walks away with a large share of the profits. So a 15% return on an average from the stock market, right? But a proper selection of proper investment avenues, we should make that by at least another 2 to 3%. So with an 18% kind of a return from the stock market, you should look at the rule of 72 to say that you can double your wealth every 4 years for the next foreseeable future.
Oh, fantastic. I will not question you any further. That we are ending the day on such a lovely note. Thank you for your lovely presentation, Sunil.
Thank you. Thank you, Prem, and all the very best for the conference
Yeah,
and to all the
thank you.
investors. Right. Thank you.
Bye.
Inspiring trust.